Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, November the 2nd, 2010. Well, a continuation of the trend in the first time frame, and we can see here that 4 trading periods ago the market changed trend to the downside with a very bearish candle, with this candle making a lower high and a lower low, and that's continued down to today's trading with a bearish candle, a red body candle, with the market making another low and a lower high and lower low. So we have a downtrend in that first time frame. The market is testing this support level at 76.60, which has been successfully tested previously, and there was some loss of commitment by the bears, as evidenced by the small shadow on the bottom of the candle, but only a very small amount. So quite a bearish candle, and this 76.60 level is very important for this market tomorrow when the market opens. There is support down below here. We can see this swing low where the market traded down to roughly about 76.14, and this basically the 76 level. And there's a very strong chance that the market will continue trading down and test 76. Down below there isn't any really strong support until the market trades down to 74.31 and then 73.87. So if the market trades through 76, then there's a very strong possibility that the market may be testing 70 below 75, and certainly around 74 below 74.5. That will depend, however, on these two areas of support that will interact with the days with this market's trading over the next day, initially 76, and if the trend continues down, the area around, previously the 76.60 area marked by the blue line, and then this swing low around 76. Now, if we do have a change of trend to the upside, there's good strong resistance overhead at the 78 level, or 77.98 to be more precise. And we can see here on quite a few occasions the market has tested within that area. So here's a big, large zone of support and resistance for this market. We can see here that the market is actually trading in a fairly large range between these two levels. Now, in Ichimoku charts terms, we are trading down below the cloud, so the market has an overall negative bias, and the market's trading below the Kijun-sen and Tenkan-sen, which means that the market's bearish in the medium-term and fast-term time frames. The Kijun-sen has turned flat, and that tends to be an attractor of price action, so there is a possibility for a change of trend, although the short-term dynamics, the bulls and the bears here, and we have quite a bearish candle here, are not supporting any change of trend at the moment. So we do need to watch the high of the current candle, which is at roughly 77.31. That will be important for this market over the next day. Support is also offered by the Tenkan-sen, which is trading at 77.45.5, and at the Kijun-sen, which is at roughly 77.98, 78. If we look over here to the Chiku span, that's trading below the corresponding price action and below the cloud, so that just reaffirms the bearishness that we're getting, the bearish readings that we've got with all of the other Ichimoku indicators. We also have the Tenkan-sen trading below the Kijun-sen, and that's been the situation for quite some time. When we had the crossover more than a month ago, and that occurred when the market was trading around 81.40, and the market's been trending down solidly ever since then. So that was quite a good bearish signal when that happened, and it coincided with a breakout down below the cloud again a few days earlier, and a successful test of the cloud as resistance previously. So very important to watch the area at 76.60 for any downside test of that level and just below, but certainly watch the high of the current candle for any potential retracement back towards the Kijun-sen around roughly 78.